Hello everyone, welcome to the Audit and Attestation class. This is part 4 of overview of audit and attestation. Please go back and look at part 1, part 2 and part 3 of the overview of audit and attestation, and this part 4 is in continuation of the same. And in this part, we will be understanding high-level overview of performing further procedure and obtaining evidence. Then second important thing, we will be understanding or taking the overview of forming conclusion and reporting section. So let's dive into it. It is not that you need to do at the planning stage. It is a dynamic document that is throughout the journey of your audit. As and when you identify new facts, new information, you can update the planning document, update the overall engagement plan, update the overall audit strategy based on the new facts which come across to your attention, right? And accordingly, you need to add new additional audit procedure required to mitigate those risks which you have identified, right? So by performing a walkthrough, at the same time you're confirming your understanding and you are validating the overall process. Probably you will be identifying the new risk as well, right? And then you will be considering those risks into your overall risk assessment. After that, once you have done with the walkthrough, like here, there might be two approaches. One is whether you are considering the control approach or whether you are going directly to the substantive approach, right? Control approach is generally more preferred, but for private company and small company, it is difficult, right? For listed company, for public company, or for issuer, it is mandatory to follow the control approach, but for private company, it's completely on the auditor judgment, right? Anyone have idea what is control approach or what is substantive approach?
Yeah.
Control. So basically, from a financial standpoint, it is substantive. But from a control approach, we first take the controls that we are working on, then we come up to the financials. So when we pick a sample and check, after we have done the control checks, then we identify the risks and we find that there is a risk in a particular area. Then we make substantive.
Okay.
So when we say control approach, it's a combination of control and substantive, wherein we are relying on the controls, we are testing them, and then whatever is left in terms of published, we get them from additional substantive testing. But when we say substantive testing, then what we are doing, we are primarily focusing on vouching and doing those kind of verification of documents, picking up samples and testing them directly rather than relying on the controls.
Yeah. So anyone from online would like to share your understanding?
Yes, I can.
Yeah, please go ahead.
While understanding or after having understanding of business environment of client, we get to know about the approaches they have to use in their daily operations. So there are two ways, as you mentioned earlier. There is a control in case of there must be some controls in case the client is large, and then after knowing about the controls the management has implemented, we'll get to know about what controls they have done, and we'll check and validate the controls and their efficiency, to what extent they are effective throughout the audit period. And basis on that effectiveness, we decide our scope of substantive procedure. So accordingly, the basis of the result or the efficiency of control, we take the samples and perform our further audit procedures on the samples.
Yeah. Anyone would like to add to Rajat's point? Very well said, Rajat. Jatin, Garvit, Rachita, Garima, Pranjali.
Sir, I have a question. So you think that control approach is not possible for small companies?
No, I have not said not possible. Generally not.
Okay. So it's preferred only for the listed and public.
So for listed, it's mandatory, but for private company, it's completely on auditor choice.
Okay,
right? So here, like Yeah, go ahead.
That's because small companies generally do not have much controls in place.
Absolutely. So they do not have like standard operating procedure. They do not have like number of resources which is required for the controls. Like for a big company, it's mandatory to have maker and checker. But in small company, if you see like one person is doing all transactions and stuff, right? So then it's difficult because like it would be an expensive affair to manage and maintain control, and it does not have that much benefits, right? So let's come back here. I quickly summarize what like the people said here, and Rajat, Sandeep, and Sanchit you shared. So two approach. One is control approach. One is direct substantive approach. So when you follow the control approach, in that you'll be testing the internal controls of the respective process as well as on the entity level. That will give you a confidence and comfort, like the overall transaction, how much risk is being involved. And accordingly, if you gain a good comfort by performing a test of control, your substantive audit procedure will go significantly down, right? But look at the scenario where you are not comfortable that company do have internal control environment, or company do not have sufficient control. There's no maker and checker. There's no segregation of duty. One person is doing all the transaction, right? So in that case of scenario, there's a high probability that there might be a risk of overriding of control, right? So in that case of scenario, you may not be end up doing test of control, but rather you'll be end up doing substantive audit procedure. Substantive audit procedure is include two type of procedure. One is analytical procedure, second is test of detail, right? Analytical procedure include complete data analytics. That is also part of your audit section of exam, as well as now it is being part of your FAR section of exam as well, right? And substantive audit procedure, test of detail, which include four type of procedure. One is inquiry, second is inspection, third is observation, and fourth is confirmation, right? So inquiry, that means you are performing inquiry either with management or with the third party, right? You are taking a confirmation like bank balance confirmation, right? Have you guys done bank balance confirmation, account receivable confirmation, right?
Yes.
Account payable confirmation, lawyer confirmation, right? Same way like inspection. Inspection is more of inspecting the document. That means when you are performing test of detail only, you are not performing a test of control, number of sample would be huge, very high, right? So you need to test all those documents, like we were discussing about purchase to payable process. So document include your material requisition, your purchase order, your vendor shipment document, your vendor invoice, your GRN, your approval of on the invoice, your payment note, right? And then your clearing of your account payment. So all these documents you need to inspect. So when you are doing verification of document, it is called inspection procedure, right? Observation. Observation, for example, inventory, right? So physical count of inventory is a classic example for observation of the inventory. Physical count of fixed assets, right? That is also an observation procedure. At year end, we do cash count as well. That is also an observation procedure, right? So these all comes in the test of detail, right? In this chapter 4, we'll be learning all these things. We'll be learning walkthroughs. We'll be learning test of control. We'll be learning substantive audit procedure, which include data analytics as well as test of detail, right? So let's see one by one what all is being in this 4th chapter. First is sufficient and appropriate evidence. So in all the audit section of your exam, you'll be seeing sufficient and appropriate audit evidence. What exactly the sufficient and appropriate audit evidence? That means the audit evidence which you collect and which you verify, based on which you are giving your opinion, right, should be sufficient and should be appropriate. For example, let's say you are doing a testing of sales, right? How do you ensure the number of samples you are testing is sufficient or not, right? For that, you'll be calculating materiality, right? You'll be applying some scientific formulas like non-statistical sampling technique, statistical sampling technique, different sampling technique, which is being approved or which is being guided by AICPA and PCOB to be used, right? So many big companies like PwC, 𝐊𝐴𝐼, Deloitte, Grant Thornton, they have their own tools to calculate by giving the respective numbers and respective threshold. But to the small size and mid-size firm, they also have like macro-based enabled tool for this, right? Which they are using. So what that tool requires information, right? So what information would be required when you are calculating the number of samples to make sure your sample size is sufficient? So first one is the overall account balance, right? Number of transactions you have, right? Then risk which you have identified. Is it low risk, medium risk, high risk, significant risk, fraud risk, right? Those all things you need to give into consideration. And then materiality. Materiality at the account level. So when you fill all this information, that macro-enabled tool, or maybe you can say sophisticated tool by the big consulting firm, that give you the number of sample which you need to test. And some of the company, like I work with PwC, they can give you the specific transaction as per the respective tool which you need to test, right? So in some of the companies, they give you a number of sample, then based on number of sample, you can choose your own sample. But some of the companies, they have such a sophisticated tool that can give you exact transaction which you need to test, right? So these are tools, or you can say techniques or macro-enables formulas are being very well approved and accepted in our industry to ensure the sufficiency of the samples, right? Then second important thing over here is appropriateness of evidence. So sample you have selected, but what is more important for giving an opinion, that evidence which you are reviewing or which you are verifying is sufficient or not, is appropriate or not. That means like in purchase and payable process, whether you have verified the material acquisition, whether you have got the purchase order, whether you have got the invoice. If, for example, you have not received the invoice and the company has made the payment. So have you got appropriate evidence? The answer is no, right? For example, you are testing payroll and there is no timesheet submitted by the employee and the company is making the payment. Would that payment document in itself is sufficient, right? So those are all things you need to keep in mind to ensure the sufficiency and appropriateness of the audit evidence, right? Next is general procedure to obtain sufficient and appropriate audit evidence. So here, general procedure, like we were discussing, will be performing walkthrough, will be doing test of control, will be doing analytical procedure, will be doing test of control. That all comes under the general procedure to obtain the sufficient audit evidence, right? Now coming to the specific procedure, obtain a sufficient appropriate evidence. First is general procedure, which include your understanding of the business, process narrative, standard operating procedure, walkthrough, test of control, and all test audited, right? Now we are coming to further drill down to the specific thing, right? Specific procedure which you need to perform to obtain sufficient and appropriate audit evidence. First one and the most important nowadays is analytical procedure, right? Nowadays, if you see most of the CPA firm, they are using data analytics for it, right? So big fours, or you can say top 10 consulting firm, who are the early adopter. But now in the market, there are so many data analytics tools are being available on a SaaS basis at a very reasonable cost, so that a mid-size and small-size firm can also use those tools. And all the software nowadays, whether it's a QuickBook, whether it's a NetSuite, ERP, SAP, Oracle, they are so much you can say user-friendly. Those data analytics tools are so user-friendly to any of these accounting software that it can easily drill down and download their respective databases, right? And then second thing, in the data analytics, there's a three-step process of doing a data analytics. First one is getting the download of the data. getting the download of the data to your tool from the respective company software, whether it's an SAP, ERP, Oracle, QuickBook, to your data analytics tool, right? Second important step here is cleaning up the data. Because the company do have bunch of data, right? There might be like batch accounting, there might be, you can say, supporting document. Now like SAP and Oracle, they have attachment functionality as well. So the people like who are actually using SAP or good ERP system or Oracle system, they do not maintain much documentation files separately. Nowadays, all are online. So all the documents for the respective transaction which they are filing, they can attach over there in online. So now no hard copy is required to maintain, and it is being accepted practice in US by the PCOB and AICPA board. Right? So you can maintain the documentation in electronic form as well. Right? So earlier there was like requirement to maintain electronic and manual both, but from last couple of days that requirement is relaxed, right? You can maintain the documentation for your respective transaction online as well. So all those document extracting for data analytics, those documentation like purchase order, not required. You know, I just need the purchase order number and what exactly the material is been ordered and what quantity is being ordered. Like for me, when I'm doing data analytics, for me, value is more relevant. There might have employee databases in the system, which is not required for us. Maybe they have vendor database, they have customer database, right? So they have like one-time vendor, they have banking. So those things might not be required. What is being important for me, which is coming in my journal ledger, right? So I'll be cleaning up that data. So first process is extraction of data. Second thing is cleaning up that data. And then third is doing the data analytics from that clean data, right? So what are data analytics, or maybe otherwise earlier also, like that firms or companies would be using in the analytical procedure is different kind of analysis, right? For example, sales, your month-on-month sales analysis, right? Your, you can say product-wise sales analysis, your geographical location-wise sales analysis, right? Your gross margin analysis, which product is actually giving you profit, which project is giving you profit, which project are loss-making project, right? So those kind of analysis all comes under the analytical process, right? For example, let's say for payroll process, right? Month-on-month payroll expenses, your leave encashment, your gratuity, your employee benefit expenses, right? How much the provision is being moving period over period. Like for example, warranty analysis, how much period over period company is making sales and how much warranty expenditure company is actually incurring. Is the provision is matching with the expenditure the company is incurring? So those kind of things will come under the analytical procedure. And this analytical procedure help you in making more effective and efficient audit, right? And at the same time, they are also very helpful in assessing the risk as well, right? So analytical procedure company need to, CPA need to perform at 3 levels. One is at planning stage. That is called planning analytical procedure. So it's being mandatory to perform planning analytical procedure so that by looking at those analyticals, you can understand and identify the risk relating to those respective financial statement line item so that you can plan your audit procedures accordingly, right? Second is at the interim stage when you are doing interim audit. Third is at final stage, that is called overall analytical procedure, right? In the interim stage or execution stage, there are different type of analytical procedure that we do perform, right? One is at account level, right? One is at financial statement level. And account level and financial statement level would be overall analytical as well as disaggregated analytical procedure. What is disaggregated analytical procedure? Like we were discussing in sales analytical earlier, like you are analyzing month-on-month sale. It's an overall analysis, right? When you are analyzing the sales based on geographical location, that is called disaggregated analysis, right? When you are analyzing the sales on product basis or services basis, that is called disaggregated analysis, right? So this all comes under the analytical procedure, which include analytical procedure and audit data analytics, right? Here, there's one more point in between is external confirmation. External confirmation, like we discussed, your bank confirmation, your receivable confirmation, your lawyer confirmation, right? Any third party actuarial confirmation. So all those things comes in confirmation procedure. Next is specific matter that require special audit consideration. So like I said, nowadays like AICPA and PCAOB has mandate in the auditing standard and as per professional code of conduct, certain area that auditor mandatory has to perform audit procedure, which include accounting estimate, right? Accounting estimates, what is accounting estimate? Anyone have any idea or would like to share?
So basically, there are some amounts, Kamal, that cannot be stated in certainty, like provision for doubtful debts. So for them, we have to use some judgments, and basis those judgments, we estimate these amounts.
Yeah. So like Jatan, you have said doubtful debt, provision for doubtful debt. Here, like management will be doing different kind of estimation. So doubtful debt can be estimated based on the credit sales, right? Percentage of credit sale. It can be based on aging, like more than 90 days, more than 180 days, right? Or maybe based on your past experience, certain percentage of debtors you can consider. So those assumptions which management is taking is called estimate, right? Anyone else would like to add any example? Impairment. Yes, impairment is also a very good example for the estimate. So what do you do actually in impairment? For example, let's say company have plant and machinery, and there's one machinery which company is not using, and maybe like technologies has changed, right? And now as the company is not using, there's no future value of that machinery other than scrap, right? For example, in book, the company do have $100,000 value of that machinery, but in future cash flow, you expect only 10,000 to be recovered from sale of that machinery, and there's no usage of that machinery because of changing technology, right? So that 90,000 is an impairment loss. That how do you have calculated that impairment loss is an estimate or assumption taken by management, right? Here, as an auditor, you will say there is no future value, but management will not say. Management will always find a moment, right? Because like it will be hitting their P&L, and as it is increasing their expenditure, they are decreasing their profit, and the profit is decreasing, it is impacting CEO salary. Right? So management will not agree to hit the $90,000. So they will say, no, we will produce certain product. Then at that point of time, as a CPA, we will be asking what product you are going to produce out of it, and what would be the revenue of them, and what are your projections for that particular machineries to produce the respective material, and what is the demand in the market. Do you have any buyer for that material? So those kind of assumption which management has taken, as an auditor, it's mandatory for us to validate, right? For example, like continuing with the same example, $100,000 machinery, right? Which from last 1 year company is not using. And you went as a CPA, you have started audit, and you have done physical verification, and you have seen that machinery is lying in scrapyard. And then you have seen in the book value it's $100,000, right? I'm sure professional skepticism, right? Then you will say, like, this machinery is lying in scrapyard to the CEO or to be like fixed assets in charge or production manager. What is the use of that machinery? Why you are not impairing it? So they will say, we are planning to utilize it, right? We are planning to build a new product line in which we'll be using it. Then you'll be asking which product line, right? So you'll be understanding their forecast. You'll be understanding their production plan. And then most important thing here, to understand the market demand. So that is also a part of it. That is part of testing estimation. That's something we have to audit. Audit. This is what is the audit. No, this is for PPN. This example is a yeah. I went to stop check of 5 years.
they keep surrenders. Auditing and they have containers.
Yeah.
So in the books there were around 60 to 70 surrenders showing their books. So I physically checked, they were not in that operational side. They were sitting in the scrap. I asked why was the reason why they're in the books.
Yeah.
So they said that they are not over in because the technology has changed. They have better cylinders in operation. But they were showing all the cylinders as homogeneous.
Yes. Yeah.
So that observation was highlighted.
Yeah. So very good example here, like Gurmeer has shared. Likewise, like I also see the same thing when I was auditing Goodyear. So they are manufacturing tires. So they have molds, big molds. So in tire industry, they are from 1961. So they have like so many molds from 61 till 2020, right? These all are like irons, big molds, and do not generally, you can say, get waste, right? So they are always be usable. But like tire industries has dynamically changed. There's no no industry in the market, no OEM in the market, no replacement market who is using those earlier days tires for which those molds are made, right? So when we have went to scrapyard, we have seen like there are so many more than 1,000 molds were lying over there. Maybe for your car, maybe for your trucks, maybe for tractor, maybe for earth mover. There are so many big molds were lying over there and having like good value in the fixed asset register, right? Same way like Gurmeer, like you said, same thing is mold kind of thing. And then we requested them we requested management to identify which molds we are running molds and which molds are not, we have not sold from last 24 months, let's say, right? If you have not sold in last 2 years, the technology has changed, nobody is using it. It's easy, like you can identify those and scrap them, right? So then we have done the impairment of them. So for impairment, all those assumptions as an auditor, as a CPA, it's been our responsibility to test those assumptions, right? Cool. Okay, next one is investment in security. So here also there are different kind of security that company do have, right? One is just purchase of share, purchase of debenture, purchase of any other security randomly from like stock market, right? Which is less than 2% of the respective company share that is generally being valued at the market value, right? Second is you have investing you have a substantial interest in an entity that is called affiliates. That means in which you have like around 20% of interest, like 0 to 20% of interest. So how do we value that associate or affiliate, right? You have a joint venture, right? That is also an investment you have made. You have a subsidiary in which you have made 100% investment or more than 51% of investment, right? How you need to value those respective investment? There are certain rules and there are certain accounting standards which has clearly laid out the principles to value those investments. That will be covering here. Next is inventory and inventory held by others. So inventory, we all know, raw material, WIP, FG, store and spares also, right? What is inventory held by others? Anyone would like to share? What is inventory held by others?
I would like to add as well.
Yeah,
So sale on approval basis.
Sale on
Approval, like we will send the goods only when they want. We will be selling to them until till then it will be lying with the customer.
no, that is just, you are saying about just in time inventory?
Not inventory, sir. Sale on approval basis.
FOB.
I don't know. I mean, it generally in CA will get to know the thing, no, sir. Sale on approval basis.
So how that would be inventory held by other? Why it will be in my books?
Sir, actually, when we send the goods to the customer, it's not a sale. We will be sending the goods. If you like it, you will purchase it. Till then,
it will not be considered as a sale. For example, many times we will be sending diamonds exhibition. We will send diamonds for diamond exhibition in abroad, sir. On a condition that you can exhibit there. If we want to buy, we will buy. Or else again, we will send the same back to the India.
Yeah, makes sense. Yeah, Rajat, you are adding some.
Yes, inventory held with consignee as well would be inventory held by others.
Yeah.
Is one of the other example.
Anyone else would like to add?
Well, sometimes we use third-party warehouses.
Yeah.
So the inventory held by them would also be classified under this category.
Yes. Welcome to that. Yeah.
Inventory in transit, sir.
Sorry?
Inventory in transit.
Inventory in transit, not.
Not so.
That classify as inventory in transit. So that's clear classification.
Okay, there's clear classification.
Yeah, yes.
So we are paying for this service for management. The inventory also is with us.
Yeah. That's true. Sorry? No, post sale it's not our.
No, after sale, we will put it in our books.
No. If you have made the sale, then it is out of your ownership. Right? So, okay, I know like most of you have shared good, very relevant examples. So maybe I can quickly summarize inventory held by other. So for example, like if there are many companies who manage like warehouses, right? So if you see on highways, there are so many warehouses, right? That has been managed by third party, right? And those warehouses are two categories. One, that company can take those space in those warehouse on rent, right? And then it would be their own inventory, right? There are certain stockists who have their warehouse and who maintain the inventory for others. In that case of scenario, if you have given the inventory to those stockists, then it would be inventory held with stockist. Second example I can give you, let's say job worker, right? For example, if you are a textile manufacturing company, right, you give embroidery work to the job worker, right? So those inventories held by the job worker is considered as inventory is held by other party, right? Same way, like if I give an example of automobile industry, they give lot of spare part manufacturing to the outside job worker, right? So there, when they give the raw material to them and they do processing of certain thing and then give it back to the company. So the raw material which you are giving to the job worker is inventory lying with the third party, right? Make sense? So those are certain examples in which you can say inventory is lying with the third party. So here as an auditor, we need to see whether the inventory which is lying with the third party, whether with the job worker or stockist or maybe sometime dealer. I'm not. Yeah. For example, let's say car dealers, right? I'm not sure like whether they own the inventory of car or it's a company inventory.
In this, what I mean is, I know this is what this like the stock is actually what that.
Okay.
So that's where it was the stock. Basically,
got it. And how about like car dealers? Do they purchase the car?
Owners would give their cars.
OEMs.
How it happens in medical industry? So the company has which is kidney transplant medicines. So NH is selling good to two stockists in Delhi. They are on the CNF.
CNF.
Then they are selling goods to distributors. Distributors selling goods to retailers. And retailers selling to us.
Yes.
So that's the trend. So if they have a sale of 2 crore rupees per month, 2 CR, 1 crore, both the CNF purchase, they will sell to the distributor in their respective regions, not south, and then distributor will sell to retailers.
Yeah. So the CNF, yes, right.
So those inventory which is lying with the CNF, if the company have the ownership of those inventory, then it is inventory lying with the CNF. CNF is a third party. But CNF purchase, if the CNF has purchased, then it's not my responsibility. Sorry, I didn't understand. Like wine and liquor.
Basically,
But yeah, but they purchase. In that case, they are the owner, right? But
so in UP, there's a model. My friend, so what the model is, they purchase the liquor, and the revenue model is once a year with the sales has been done, they will be given a percentage of that sale.
Yeah, same like royalty.
Yeah, it's not a sense. If the stock ownership is 50%, right, then it's inventory held by others, right? But if that is already been sold, then it's the same.
Then it is absolutely.
So then it's CNF or anybody else.
Yes. Right? Everyone good? Rajat, Sandeep, Jatin.
Yep.
Cool. Okay, so next one is litigation claims and assessments. Now, that's one of my favorite area. So here, for litigation claim and assessment, here we'll be dealing with the third party generally, who is taking care of the company's litigation matter. Might be their attorney, might be their legal team, might be their secretary team, might be their compliance team, might be their HR team. So it depends on different type of claims, litigations, which the company might be having. So it may be tax, it may be international taxation issue, right? It may be like labor laws, it may be might be vendor claims, it may be like customer claims, right? So all those kind of litigations and how you need to perform the audit procedure around those litigation claims and assessment, what comes in this section, right? Last one is the entity ability to continue as a going concern. Anyone would like to share what is going concern? Have any idea?
The notion of the ability of the directly, the procedure have got the movement sides.
Yeah.
Whether they be able to run their operations.
Entity will be able to continue for more than 12 months.
Yeah. So when the whether the company has ability to continue their operation for next 12 months or not, right? 12 months is generally considered as a foreseeable future period, right? So what all procedure as an auditor we need to perform to ensure that company accounts are being maintained on a going concern basis. If you found anything severe and you believe that company may not continue their operation for next 12 months, then an entire accounting will change into the liquidation accounting, right? Then everything need to be valued at the net realizable value, right? So then all assets, liability, everything will go into the revaluation model, and it will calculate in a liquidation model what will be realized out of those assets and what would be the payments finally we need to make in the settlement, right? The next will be misstatement and internal control deficiency. So misstatement would be in terms of number, right? And deficiency would be of control deficiency. So there we'll be learning like significant deficiency and normal deficiency. Like if it is a normal deficiency, then as an auditor, it is not much material for us. But something which is being material, then it is comes under the significant deficiency. And to the significant deficiency, it is being required to report in your internal control report, right? And timely you need to give the update about those deficiency to the management and those charged with governance, right? And to other small deficiency, it is always good practice to give management letter,
right? In the management letter, you will share like these are the deficiencies we have identified, and these are recommendations from our side to improve and enhance your overall control around those deficiencies, right? Next, we will be learning a written representation. So first we have discussed engagement letter. That's a starting document. And the last one is management representation letter. Sometimes it is called written representation. Sometimes it is called management representation letter. And in India, we call it letter of representation, LOR, right? So what is being covered in the written representation? High level. Any idea?
I would like to add.
Information they have shared is true and fair in their perspective. They have given all the information that was available within their online, and they're not aware of anything that's beyond what they have.
Yep. Rajat, go ahead.
So basically in LOR, we tend to know about the management responsibilities and their adherence to compliances and the framework they have used to to prepare their financials.
Yep.
So all the details related to that and the person who are responsible for the preparation of financial statements are being presented in the written representation or LOR. So
Yeah.
based on that, we generally tend to check the compliance of their framework, which they have opted with the applicable frameworks, so that in case of any deficiency, we can plan our audit and in control testing as well in their substantive procedures.
Yeah, that's very good. Anyone else would like to add what Rajat and 𝐀𝐻 and 𝐵𝐴 said? Yeah, Pranjali, Rachita, Vineet, Garvit. Okay, so in the written representation, like what all of you said is absolutely right, but there are a few more things which need to be considered in the written representation letter. I'll summarize everything in a here. One is like management responsibility for the designing and implementing of internal control, selecting the financial reporting framework, preparation of the financial statement, right? And they are not aware of any risk of fraud. If they are aware of any risk of fraud, then they would be giving the declaration. All the estimates and judgments they have taken in preparation of the financial statement, and any other thing as an auditor you feel relevant for the audit engagement, you will be requesting the management to provide the written representation, right? So all those things, and it has to be signed by the person who is in charge for the financial statement from the company side. It can be CEO, it can be director, it can be managing director, depending on the person who is the overall responsible for the financial statement and internal control from the company perspective, right? Then last one is subsequent event and subsequently discovered fact. So there's two things. One is subsequent event and the second thing is subsequently discovered fact. So subsequent event, any idea what is subsequent event? After the balance sheet. Yes. So there
Right
are
after balance sheet date.
Yeah, please Rajat, go ahead.
Someone else was also telling.
So subsequent events are those events which is occurred after the balance sheet date but before the signing of financials. Like for the listed company, from balance sheet date, that is year end date, within 60 days they need to file with the SEC. Let's say you are doing an audit of a company which has year end of March, so year end of December, right? And 28th February is the last date of filing of the return to the SEC or 10K, right? So in that case of scenario, if any event occurs from 1st January to 28th February before the filing or before you're signing off, that is being considered as a subsequent event, right? Earlier, like Sandeep, you are giving example of fire. So for example, in January, there's any plant in which like fire has taken place, or maybe any earthquake, right? Anything which is material to the financial statement. So those are required to be disclosed. But second thing here says is subsequently discovered fact. That means facts were already there
before the year end, but it has come to the attention of the CPA after the year end, right? For example, some theft has already taken place in the month of November, but management come to know in the month of January and they disclosed you in January. So there's no default from the management side, but they were not aware of it, right? So for example, one machinery has been stolen in the month of November from the dockyard, right? So which management was not aware of, but on 31st December, when they have done the physical count, they got to know like machine has been stolen, right? So then those fact which has been come to you in later attention, so you need to consider the accounting adjustment entry for that.
So can we operate the back notice on
Yeah.
Because we take, like, for example, gas something on that statements. So can those observations be listed as a subsequent?
Yes. For example, like Gurmeha here says, like cutoff procedure. Let's say in the sales testing, you are doing cutoff procedure, right? What you will be doing in the next month, how much sales has been dispatched, right? So from the dispatch register, you have identified certain item for which invoice has been raised already in December, but dispatch has been made in January. That means ownership has been transferred in January. That means sales are overstated. So you'll be taking an adjustment entry for that, right? Same way, when you are looking at GRN, good receipt note register, yes, those sales would be of the next financial year. So in current year, you will be reversing the sales, right? Yes, right? And same way, looking at the purchase side, for example, you have received the invoice in the month of January, for which GRN has already been booked in December, but you have booked the purchases in January. So in that case of scenario, you'll be booking the purchases in December, right? Those all comes under the subsequent event procedure. Anyone would like to share any experience or add anything on subsequent event? Okay, so we are coming on the last chapter. For yes.
I don't know if it's part of the that the part of
Sorry?
Will that be part?
Yes. Yeah. All of them. Okay, so last chapter we'll be having forming, conclusion, and reporting, right? In this, we'll be doing reporting on audit engagement. Audit engagement would be your group audit engagement, would be your component audit engagement, your standalone audit engagement, right? In which we will be forming an opinion, including modification of audit opinion. So here we'll be understanding what type of issues that come across, which is material to the financial statement or material for the auditor to opine upon, right? So there might be a gap issue, there might be a GAAS issue. We'll be learning on those as well. So if it is a gap issue, is it a material gap issue? Then you'll be issuing modification of report. If it is a significant, or you can say persuasive, impacting the financial statement, then we'll be issuing adverse opinion. The second type of issue is GAAS issue, where you have scope limitation, like gap issue where you have accounting impact, GAAS issue where you are not able to perform the audit procedure, right? For example, your company have a location in Ukraine, you cannot go for audit, right? So maybe like a couple of months back, for example, we have some mines in Afghanistan when they were going under the war zone, so you cannot do the audit procedure over there. So it's a scope limitation. Huh? Right. So in those cases of scenario, that there might be genuine reason for scope limitation, but there might be a management manipulated reason as well. Like management may ask you not to reach out to our legal counsel, not to reach out to our lawyer for anything, right? So in that case of scenario, you need to assess whether you want to continue that engagement or not. So generally,
where you have such kind of restriction placed by the management, you will withdraw from the engagement. So otherwise, in the GAAS issue, you will be issuing, if it is material issue, then you will be issuing a modified opinion. But if it is a persuasive issue, right, then you will be issuing which report? Disclaimer of opinion, right? You will be issuing a disclaimer of opinion. And if you are not comfortable with the scope limitation, it's good to withdraw, right? Then if you see like reporting on attestation engagement, attestation side, like we were discussing, agreed upon procedure, examination procedure, or you can say service organization audit. So those all comes under the attestation engagement, where you'll be testing the specific thing, or you'll be testing the specific assertion, financial statement line item, or class of transaction. So for which like overall procedures has been clearly laid down in the scope of work, right? On those you will be drawing a conclusion or your finding. So the report is called finding report for them. Next is report on compliance. So this generally comes in governmental audit, where you need to issue the compliance report, right? Compliance report, like for the government auditing, whether it's a government entity or whether those NGO trust which receive the fund or financial aid from the government, and you are testing those respective funds or respective trust, then you need to give the report on compliance of those laws and regulation basis which that aid has been granted, those fund has been granted. So every fund, whenever government is sanctioning any fund, giving any grant, so there are certain rules and regulation and protocol that respective trust, NGO, society need to follow. So you need to test those, whether those companies, those societies are following those protocols or not, right? That comes under the compliance report. Next is other reporting consideration. Other reporting consideration, comprehensive statement and consistency between the period. So other reporting consideration, these all are miscellaneous topic basically. Here you need to ensure like what you are following in current year, similar things, similar standard you have followed in previous year. It should not be like previous year you are not following GAAP and this year you have started following GAAP. Then what is it? Number in current year might not be apple to apple comparison with the previous year. So for example, this kind of problem generally arise with the company who is doing first time audit, right? In the previous year, they might not be following GAAP. They are just doing cash basis of accounting, because in US, it is being allowed for the tax purpose, cash basis accounting. Like in India, its accrual is mandatory, but in US, you can go for a cash basis of accounting. Yes. No, it's not mandatory to prepare accrual basis. They can.
But when a company is adopting a cash-based accounting, is it mandatory for it to then comply with the accrual-based accounting?
Tax purpose, no.
No.
Tax purpose, not. But when they are making financial statement, then it has to follow accrual. It depends. They are not big. They are small, pop and mom shops kind of thing, like small firms, right? Or not a big company who is looking for funding, looking for any banking loans, right? You know, when you apply for loan, it's required for debt covenant, right, to follow accrual basis. So that means it's very small, like individuals, sole proprietors.
So there is some threshold for a particular company.
No. In US there is no threshold. In US it's not. But if you want to grow, then you might be having like borrowings. You might be require funding. Your investor would be requiring accrual basis of contract. So that's need of those. And then in future, if you want to go for a listing, then it's mandatory. But there's very relaxation. US laws are very relaxed, especially for the startups and companies. That's the reason like there's so many startup every year we see. Like majority of the startups comes from Japan and US. And in India, like startup to compliance में मिल जाता है, right? And next one is other information in document with audited statement. So other information, have you heard about management discussion analysis?
right? MDA section in the financial. Have you seen financial statement?
Yes, many a times.
Many a times. I know. Maybe some of you, I can share here in chat box. Maybe let me quickly download some financial statement that would be helpful for each one of you. Let me see if I have something. I think in some far class I have shared. Yeah, so this one. Computers. So I know like most of you have seen financial statement, but I'm sharing here, let's say GM10K. So this is General Motors financial statement. So request you all to please download. And maybe I can share one more. This is for Microsoft. So maybe like in today's class, you can consider this as a homework to go through these two financial statements so that you have a broader idea of the accounts, and accordingly like you can digest the auditing concepts. Right, so I have shared two financial statements, 10K of Microsoft and General Motors. So request you all to please download those, and it would be very helpful. And maybe like would be good like tomorrow or in this week you can go through those financial statements to have a broader idea and understanding about how like financial statement looks like. Right. Next one is review of interim financial information. So review of interim financial statement is basically like quarterly reviews, semi-annual reviews, those kind of financial statement or financial information, or sometime when in the mid of the year you're going for IPO, right? In that case scenario also you'll be issuing the mid half year reports. Next is supplementary information. Supplementary information is your notes to accounts. Like to the financial statement, you have balance sheet, you have income statement, you have cash flow statement, and to explaining those balance sheet, income statement, and cash flow statement, you have detailed notes to accounts and footnotes, right? Those all called supplementary information. Next is additional reporting requirement under Government Accountability Office or Government Auditing Standard, which required like compliance report, right? Which required your compliance with law and regulation. So those are additional reporting requirement under the Government Auditing Standard for the government entity and the entity who has received grants or fund from the government. Next is special purpose or other country framework. Special purpose framework, like for example, for the let's say for import duty credit, or maybe for export, or maybe for let's say you have investor in foreign, you are using US GAAP, but you are investor now whom you are pitching for the investment, they are in Europe and they follow IFRS, and they ask you to give me your financial statement in IFRS, right? That is the special purpose, or you can say country specific framework. Sometime for the you can say government grant also, they required financial information. Even though you are not preparing the financial statement, but they required financial information in their respective format. So those respective format are called special purpose framework. Next is key audit matter. So key audit matter, which is being key consideration for the auditor, or you can say mandatory areas to be focused by the auditor, which include like estimates, judgment, or you can say fraud risk area. So these are three areas comes under the key audit matter. And last one is miscellaneous topic. So this is the entire overview of the audit section of your exam. So I know it has lot, but maybe like today's class might have given you the broader picture, broader perspective, what we're gonna cover in next couple of weeks.
So,
वो सहज चैप्टर में तो नहीं होंगे, बट AICPA की वेबसाइट पे मिल जाएंगे. नहीं ये बुक सफिशिएंट, जो एग्जाम में आना है वो सफिशिएंट है, उससे ज्यादा तुम्हें प्रैक्टिस के लिए नॉलेज चाहिए तो आई कैन गिव यू लॉट ऑफ रिसोर्सेज। या
section wise jotted down.
हाँ
So exam practice की plan करने पड़ते हैं या
एक लॉजिकल ऑर्डर तुम्हें पता होना चाहिए कि किस तरह से ऑडिट होता है। लाइक वी हैव स्टार्टेड विद इनिशियली एक्सेप्टेंस ऑफ ऑडिट, कॉन्टिन्यूएंस ऑफ ऑडिट, एंगेजमेंट लेटर, फिर प्लानिंग, रिस्क असेसमेंट, फिर वॉक थ्रू।
we are going through the entire procedure क्या है from start to end just day to day overview, but if we don't know the standards how we
No, like standards would be covered here. This is whatever is being required for the exam is more than 100% covered in your notes. Yes, absolutely. Because like in India also, we have you can say taxman books, right? We have for the company law also, that's such a big books, right? So those books are there. They are always good, but they are reference material when you need more detail in the respective area. But for the exam purpose, what you study, how to do.
and for the exam purpose
Not at all. It's an open book exam. Yeah, so I'll show you.
or
No, for where it is being required to mention the standards.
One clarification, Kamal, please.
Yes.
Sorry, आपने वो जो financial share करे हैं, where did you share those?
Chat.
I am not able to see that chat option here.
Chat box is there.
Chat box is there. Yes. Look at the options below.
Yeah. I was just looking for that. Maybe it's my official.
Are you on mobile or laptop?
Laptop.
I'm sure there should be a chat option.
Maybe it's my official laptop where it might be restricted.
Maybe I'll email you or maybe WhatsApp you.
Okay, got that. Yeah. Also, by what time we are expecting to go through by audit? Like how
Today
many
class?
No. How many classes we are expecting for audit, complete audit?
Maybe 11 to 12 weeks total.
11 weeks? We are talking like 22 classes.
Yeah, 11 weeks or 12 weeks at the max.
Okay, got that. Thanks.
Cool. Any other question, you guys? Or how it looks like overall audit? Exciting?
This looks easy to me at least.
Exciting, interesting?
Yep.
Or boring? Okay. So I think we are good for today class, right? So tomorrow we can start with examination and definition part. We can cover tomorrow. Okay? So tomorrow we'll be starting at 10 o'clock and we'll be starting with the examination section.
So thanks.
Cool.
Okay, so thank you.
Bye. Have a good day.
Thank you.
Bye everyone.
Thank you.